Hey traders, this is Ron Haight. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with daily charts using Thinkorswim's profit charts, and we're going to look at the diamonds, the DIA, the Dow ETF, and it was up a little bit on Friday. If I zoom in here from September through now, again, this was the ledge I talked about. We did not want to get below because that could just open up around a selling pressure, and that's what happened. And since we moved up, and the purple line here is the 200-day SMA. That is an institutional moving average. Above it, bullish; below it, bearish, or at least not bullish. And we managed to get Wednesday, Thursday, Friday above it. That puts the target at 260, which is about $10 on the DIA or 1,000 Dow points. If we take a look at the SPY, the S&P 500 ETF, same thing, fell off the ledge, now we're rallying. We have not gotten above the 200-day SMA in purple just yet. Take a look at the Qs. Same thing, not above it just yet. And that's going to be a theme. Only the Dow is above its 200-day moving average. Here is the Russell 2000. These small caps, it's just going up slowly here nicely to target. You have your first high here, but then there's sort of a mini double top, and that's coinciding with that 200-day moving average right now around 157. And considering how the 200-day matches this, that's a great target point. And then the mid caps, MDY, also up a little bit on Friday, zooming in. 200-day coincides with these previous highs. So across the board on the daily charts, the bulls have the edge walking into the first full trading week of February. But let's go take a look at the weeklies. So we're going to go 2 years, change this to a W for weekly. Now every candle represents 1 week of time. So if we start with the mid caps and work backwards, we're above the 20 period, target 50 period, which goes back to these previous highs, which is exactly what the dailies said. If I go to the Russell 2000, same thing, right back to the 50 period, goes back to those previous highs. Take a look at the Qs. They actually tagged their weekly. Now the weekly closed at 169.38. The high on this bar was 168.99. You're talking about 39 cents, difference basically. So, or thereabouts. We're basically there from the intraday high. If we get above it, then the all-time highs get back on the table. So yes, it's been a nice rally on the weeklies. They're not breaking out on the weeklies just yet either. Now let's take a look at the SPY. Try that again, SPY. There we go. Right on it. So it too just hasn't gotten above it just yet, but then the target would be 280, 100 S&P points higher, or $10 on the SPY. And the diamonds, as you guessed it, since they did close above it on the daily, they're leading the way right now, target 260. Again, just like I said, 1,000 points higher on the Dow Jones. Now, what would it take for these to roll over and start saying, oh man, here we go again? On the weekly basis, if I just use the Dow just to save time, we want to close below all these moving averages, the 5 period in blue, the 20 period in red, the 50 in orange. We get below that cluster, then that puts, from a weekly perspective, the recent lows back on the table. Now, if I take the Dow and go back 1 year daily and I zoom in, we would need to close below all these moving averages. So if I wanted to put an alert, it would probably be about 241. We get below 241 on the DIA, you've now broken all those moving averages. That technically, definition, gives the edge to the bears. Targets here and here. Now we could do Fibonacci's and look at retracements and things. We don't have to get that granular. Below here is not good news for the bulls. So slow and steady as she goes. Again, bulls get the edge. Let's take a look at some individual stocks. Here is Facebook. These guys are in the news, like I say, seemingly every other day for doing something that is less than honorable, you could say, with privacy issues. The stock on Thursday, gapped up with earnings, got stuck at the 200-day. And then Friday, we tried to trade higher, could not get above the 200-day. This is interesting. Mega volume Thursday, good volume Friday, still couldn't bust the 200-day. It's funny how these levels work. So if I'm going to look to trade Facebook bullish, at this stage, post-earnings, it needs to close above the purple line. And ideally, I want to see it close at the highs of the day, that the bulls felt confident enough to say, you know what, we're going to take it right to the close. We're going to be strong, finish with a positive. Right now, they're finishing with a whimper. They're driving it, and then there's overhead supply coming in, and then there's selling being met. There was a report out that half of Facebook's accounts could be fake. I don't find that as rocket science. The same thing happens with Twitter and all these other places. The earnings apparently or reportedly came in pretty decent, all things considered. Now let's take a look at Amazon. Amazon had earnings on Friday. This little dollar sign and profit charts tells you it was Thursday night. So Friday was the first trading day, and the stock gapped lower. It's lost, call it 100 points or so, but we're still caught. So if you look at the purple line, 200-day moving average, institutional, up top. On the bottom, 50-day institutional, 50-day SMA. We are sandwiched in between here. We bust out above the 200-day, that's bullish, target, all-time highs. We break below the 50-day, target, December 24th lows, 1350. Until then, you could call this like a bracket trade opportunity, but given there's only 1 day post-earnings, this could go either way. So I just want to watch Amazon. And if it busts up and closes above the pre-earnings high here from Thursday, that's going to be bullish for the market, in my opinion. It'll be bullish technically. Now here's Apple. It's doing something similar to Facebook in a sense. Back-to-back days of really little follow-through. It got to the highs of the day and then came down. So earnings was back here on Tuesday night. Wednesday we got above the 50-day. Pull back off highs. This is still posturing as bullish. It is better than Facebook, although the candles are somewhat similar. But technically comparing Apple to Facebook, it's not unintended apples to apples at all. They're not the same. Facebook or Apple has gotten above its 50-day. The target, you could go to previous highs here, 180, 185-ish, and then of course the 200-day sits there. I get a lot of questions on, well, let's just say I'm bullish on a stock. How do I know when the sentiment is turning, or what could be considered as a potential trailing stop always from an educational perspective? And my answer, more often than not, is going to be that red line. It's not perfect, but it is the 20-day exponential moving average, 20-day EMA. We stay above that, the 20-day trading outlook is bullish. We get below it, it's no longer bullish. You might find a 21 or a 23 might work better. Tomato, doesn't really matter. Pick one. I just like the 20-day. And sticking with the FANG theme, let's go to Netflix. Netflix had earnings, pulled back a little bit, stayed above the red line, and now we're just starting to push back up. Netflix is still bullish here. Target, of course, most recent previous highs, right back up here, but then really back up just north of 375. And Google's going to have earnings Monday night. This is setting up to be interesting. We have a bit of a rounded bottom here. We also could argue there's a little bit of an inverted head and shoulders in there too, and we are sitting right at that 200-day. Upside target 1225. If Google comes out with good earnings, I could easily see it gap right to that level. So once we get above 1225, you go back up to this. It's not perfect, but it's a triple top-ish, 1270 up into maybe 1280 as your upside target. If we gap down, the 50-day here is going to be key, I think, because below the 50-day, it catches some of these lows in here. Go right back down the December 24th lows, which is just under 1,000. And another stock to look at here is Caterpillar. I get a question on those trailing stops and how do you know breakouts and how do you make a call on them, so to speak. To me, it's pretty easy. If you look at Facebook and just go back to how the stock acts at an institutional moving average, the 50-day, it gets below, tries to get back up, falls. We get up here, we actually get through the 50-day, hit the 200-day, falls. We get above it here, we quickly fall back, but then we rally, okay? Right into the 200-day, right into the 200-day. The 200-day right now to me in purple is more important than the 50-day, not because I think so, because I see so. When it gets to that level, for whatever reason, whether it's institutional, whoever, whatever, they're selling it. When you get above it, that's the breakout. And the target then is the high from October at 155. And that could be potentially tradable depending how much of a big move happens when we get up through there. Otherwise, this stock is just in a trading range. And the only way I can be bullish on Caterpillar is a close above the 200-day, which right now would also get us above these previous highs. That would also be bullish. So I hope you find that helpful. Wish you guys a fantastic trading week ahead, and I'll see you in the next video. Take care.